Hello everyone, welcome to today's US Open live webinar. It is Thursday, November 23rd. I'm your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. Calm notes prevail today since this is a holiday shortened week in the US due to Thanksgiving. So there is some holiday lull, we would say. Nvidia was in the spotlight this week with blockbuster results, and of course the UK's fiscal plans, which include an increase in the minimum wage, and of course we have Japan inflation up ahead. These are the key themes of today's session, but before we begin, please read through the risk warnings and the disclaimers. Once again, please read carefully through the risk warnings and the disclaimers, and bear in mind that anything discussed in this session does not constitute investment advice and should not be taken as such. I'll give you a few more seconds to read through, and then we will begin. Okay, let's get the ball rolling. We will start as always with Euro USD, as usual, which we already have on our screens. Then we're gonna move to the UK fiscal announcements and what impact they had on GBP USD and their monetary policy implications. And then we're going to move to the Nasdaq 100. Of course, US markets are closed today due to the Thanksgiving holiday. And then we're going to talk about Nvidia's blockbuster results and outlook. And then we're going to talk about what's ahead, mainly the Japanese inflation figures. Now, USD is little changed amidst the lack of catalyst. The encouraging preliminary PMIs do not provide a lift, and the minutes from the last policy decisions from the ECB did not really offer anything new. The rejection of the 61.8% Fibonacci creates risk for a slide towards the daily Ichimoku cloud and the 200 period EMA, which are located at around 1.73. However, sustained weakness and the next on the other side of the cloud does not look easy. The common currency has the advantage at this stage, and at least as long as it sits above the 200 period EMA, and has 1.1096 in its crosshair, but will need fresh impetus to challenge it and does not inspire confidence for prolonged strength. Not much has changed since what we have discussed in recent sessions. Now on to the UK front. the government there unveiled its 2024 budget aiming to support the ailing economy with various tax breaks. And one of the key highlights is the increase in the minimum wage by nearly 10% starting from April. These measures, however, could make it harder for the central bank to control inflation and to refrain from more hikes after having, of course, stayed in the sidelines for 2 straight meetings. Now, pay growth in the UK is historically high, despite some recent cooling, and has been a constant headache for the central bank since it feeds a wage price spiral. Inflation has fallen substantially, but the BOE does not see a drop below the 2% target for another 2 years. And if if the bank is forced to hike again, this could derail the already frail economy. Now, GBP did not have that much of a reaction to the news, but it maintains its upside bias since the autumn statement announcements push back expectations for rate cuts and create upside risk to inflation, which keeps in place possibility for more tightening and definitely for a prolonged restrictive stance. The pair runs a profitable month and has the ability to tackle the 1.2680 resistance, but we remain cautious around further strength towards the 76.4% Fibonacci of the July-October drop. There is a risk for renewed pressure, of course, that would test the 200-period EMA, which is at around 1.2330. But the daily Ichimoku cloud can provide support in such declines, and the October low at 1.2036 looks rather distant at this point. And now onto the NAS 100, the US tech heavy index. Of course, Wall Street is closed today and will be a half day tomorrow due to the Thanksgiving holiday. The CFD of course, has pricing, but with changed trading hours than its regular ones. So the tech heavy index runs another profitable week, which brings the record highs in the spotlight, 16,770. But this may prove elusive in the near term. The index is hesitant at the 16K handle, and we could definitely see a pullback from these levels. However, significant shift in sentiment would be needed for the 200-period EMA and the bullish bias to be challenged. With the 200-period EMA located at around 15,300. Again, little changed here. We said that there are some calmer nodes due to the Thanksgiving holiday, and the technical outlook remains pretty much the same as in recent sessions. And now let's talk about Nvidia. The chip designer has enabled the generative AI revolution since its GPUs are a near monopoly in the development and deployment of Gen AI applications like ChatGPT. The company's leading work has allowed it to monetize this boom pretty quickly, since AI demand has led to a surge in revenues and profits. This accelerated in the August-September period according to Tuesday's results, with new record highs on both top and bottom lines, and of course, projections for even higher sales in the current quarter. This boom is also reflected in the stock price, which has more than tripled since the start of the year and clinched new all-time highs this week. However, after the results, we see some pressure in the stock, as you can see on the chart. The valuation is sky high, and this creates apprehension to traders, and we saw that in the previous earnings in August. Furthermore, this week's release, the company issued a warning around China sales due to the trade curbs of the US government. All of this will be offset by the broader AI demand and other products. And this has created some concerns. Furthermore, its near monopoly won't last forever. AMD is already stepping up its efforts and expects to roll out during the quarter its own AI chips, and is of course one of the few companies with the potential to challenge Nvidia's dominance. On the technical front, there is room for a pullback, and the first major support is provided by the 200 days EMA below the 400 mark, of course. However, it's hard to envision sustained weakness given the revenue projection and its dominant position in the market. Further upside is the most likely path, of course, although progress may be slow as it has been for the last few months. And with that said, let's talk about what's ahead, mainly Japan's inflation on Friday. CPI ex fresh food ticked down to 2.8% in September, but has been coming in above the 2% target for around 1.5 years. The central bank raised its forecast for the current and the next fiscal years, but remains reluctant to move away from its ultra loose monetary setting as it struggles to create a virtuous price wage cycle following decades of deflation. It has been taking steps towards normalization by loosening its grip on the yield curve control and has hinted at an eventual exit from negative rates, although has not shown any inclination to change tack anytime soon. Other than that, we also have tomorrow preliminary PMIs from the US. The economies generally perform very well, but there are signs of cooling, and the PMI results could offer more insight into the state of the economy. That's pretty much it for me from me for today. As we said, Wall Street is closed today and it's a hard day tomorrow due to the Thanksgiving holiday. We will talk again on Tuesday at our usual time slot, 10 minutes before Wall Street opens.